This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil. So what I'm going to do today, I want to basically give you an idea why I started the channel originally, which is I wanted to give people a better idea of how to be their own analysts. And what I'm going to do is I'm going to show you sort of the basics of my approach and how we can use trend and momentum to, I think, give us a real good idea of how to analyze the market and figure out stock by stock, index by index, right? Where things are situated. And I think it can make you a better investor. All right, let's go ahead and get going now. A lot of these techniques are in my book, and we're going to talk about both trend and momentum. You can learn more about these in this book at rabilstockresearch.com/book. Also, if you do enjoy the content, please hit that like button and also subscribe. So we want to start with the basics. And, if you learn technical analysis from anybody, you should be learning this concept of these four stages. Okay. And so it's more of a universal truth. It's not something that, one person uses this idea and someone else doesn't. I think if you're going to understand the basics, you got to first understand that a stock will go through a basing stage or an accumulation phase. Okay. And then once we get enough strength in the buyers to turn this accumulation phase into a uptrend, we break out, we get some upside follow through, and then we'll trend to the upside until investors believe that we've made too big of a move and it's a time to start taking some profits. And then we start forming this topping phase. Okay. And then when the sellers are stronger than the buyers, then we actually turn the actual pattern down to a downtrend. Okay, and then we start the process all over again. Now, I'm not giving you that much detail into the thought process of each one of these. And the reason is that I want to explain the approach that I use is that this happens in every time frame. So this could be happening on a weekly chart, but it also could be happening on a 10-minute chart. Okay, and it could be happening. So we could be in an uptrend on the weekly, and we could be in a basing stage or stage one on the 10-minute, okay? Or we could be in a topping phase on the 10-minute. We could also have a daily chart in a topping phase while the weekly is in an uptrend or a downtrend, okay? So you have to understand how the market works and flows in multiple time frames. So that's kind of the key, I think, in terms of learning the basics, okay? Now, if we move on, I do want to give this explanation, and this sort of takes it to the next step. And what we're looking at is, and now I'm only giving you half of this stage. So this would be the topping stage. Stage 3 is the topping phase where you top out, and then you go through a downtrend. This is stage 4, and then you start the new basing stage. That's stage 1. Okay. And then here is where you start stage 2, where you start to come out of this basing phase and start a new uptrend. All right. Now, if you notice, the way I have drawn this is we can see on the the higher time frame. So let's just make this simple. Let's say this is a weekly chart, and what I'm showing you here with the blue line and the price action is the daily. All right. So the weekly chart is actually in an uptrend, and we come down in a corrective pattern, and we go through the 4 stages, and then we emerge out of that. And what we're looking for, this is a stage 2 uptrend, and we're looking for a match. We want stage 2 in 2 consecutive time frames. Now, what you can do if you have the right momentum conditions in place is buy stage 1 in anticipation of stage 2. This is the crux of my approach, and that is understanding the lower time frame triggers. All right. If we know we're in an uptrend on the higher time frame and everything's looking fine, and we come down and we don't have that much strength in the decline phase based on the momentum conditions. Now, I'm not showing that on here, but we want to watch the momentum conditions using MACD and using ADX in all these time frames, especially in the time frame that is going through the 4 stages. If we come down into this area and we see a shift taking place, or we see no real strength in the sellers, then we can go down to this time using this time frame and go and look for price and look for and try and enter the reversal pattern, breaking the downtrend, coming back and testing. And if we get a test that looks good, we can buy the 2 and the higher low of the 2 before it turns into a new uptrend. Now, the 2 here is a little different than what I'm talking about with the stage 2. This is actually a 1, 2, 3 reversal, and the 2 is the test of the low as opposed to waiting for the trend to turn to the upside. This is where we'd be in a stage 2 uptrend, is buying it kind of on the 4 after, the 3 makes a move, we turn back up, and then we make another higher low. So I'm telling you is that if we have the right momentum conditions in place, we can buy inside the 1 using this 1, 2, 3 reversal. All right. Now, when we want to do this are these areas I'm showing you over here. This is where we're coming into the zone between the 18 and the 40. You see these spots where we're looking at pullbacks to rising 18 above a rising 40 with good momentum condition behind it. All right. Now, if we have that, then we can look to play these pullbacks and use with good momentum, right? Modest momentum to the downside, strong momentum to the upside, modest momentum to the downside, and then use our price pattern reversals to get us in at the turns. All right. So that should help us be able to identify when to enter during these pullbacks, these bigger picture pullbacks. All right. So what we're trying to do overall is look for a situation where we get long-term uptrend with good momentum conditions in place. Now, I'm not drawing these, but we've got MACD and ADX both confirming the trend to the upside. Preferably, we have the 18 and the 40 rising at about the same rate. They don't have to be parallel, but we want them kind of looking like that. All right. So that's our starting point. And then the second stage is we have a stock that is correcting on the next lower time frame. Again, if this is the weekly chart, then on the daily chart, we're watching it correct, and we're looking for a reversal on this time frame. Okay. And if the momentum on the lower time frame, now this is the upper time frame, but if we can do the MACD and the ADX on the lower time frame, and all of this is explained in the book, but it's really in detail. I go through this in the course and or the courses. And if we have this reversal, right, then with the right kind of momentum in place, then we can get in when we can get our match. We can get a stage 2 and stage 2, but we can buy it before the smaller time frame, the lower time frame becomes a stage 2. All right, we can anticipate a little bit because we know we've got the upper time frame in our favor, and we know that the momentum on the lower time frame is also in our favor for upside continuation. All right, so that's what we're trying to identify. Now, I'm going to give you just a few examples, and I want to show you. So I did this on purpose. I've got on the bottom, I've got the quarterly chart of the QQQ in the bottom left. All right, in the bottom right, I've got the monthly chart. All right, now in the upper right, I've got a 10-minute. And then in the upper left, I've got a 2-minute. I wanted to show how this is universal based on time frames, meaning if I can put 2 time frames side by side, I can read the market. I can see what's happening. I've got pullback to the rising moving averages on a quarterly chart. You see that? We've pulled back exactly like what I was showing. Now, here's where you're getting this lower high, lower low on this time frame. Now, in this instance, we broke the downtrend line and we didn't get that higher low until way over here in this turn. But we had the MACD. You see how the MACD held the 0 line, and that the sellers had no real strength behind it. So having that in place allows us to play this. Now, obviously, with a monthly chart, what you could do in this instance is instead of waiting for this higher low and waiting for the 2 here, we can go down to the smaller time frame, look at the weekly chart, look at the daily chart, and trying to identify some way to get in off of this bottom because the momentum condition is so good. I wanted to keep this simple. We can use 2 time frames side by side and still get a very good entry at the start of a new up leg. All right. Now, if we go to the 10-minute, we get a gap up to start the day. It pulls back. All right. And then we consolidate. We make this move. Now, this pullback is to a rising moving averages. The conditions in place, this is reverse divergence right here. Okay. We've got green on top and no sign of real selling strength. So during this pullback, we can then draw in our downtrend line and we form the higher low. And that is our 1, 2, 3 entry as we're getting in, as this is starting to emerge again to the upside. All right. Now, in this case, because on this decline, the sellers were a little too strong, we had overrun in here. We do want to wait for a little bit more confirmation. We want to wait for that 3 to take place before things get going to the upside. All right. So I wanted to just make sure I kind of covered this in 2 separate types of time frames. One is the upper time frame, like a really high time frame quarterly chart with the monthly, and then the 10-minute with the 2-minute. This works universally, but it helps you read the market and it helps you understand how to put these time frames together. All right, let me know if you have any questions. Thanks.